What is going on, everybody? It's Stas here. Welcome back to another video. So in today's video, we're going to be talking about what is better for you, investing in the stock market or trading in the stock market. Both of these are very different. They have different principles, different strategies. And for the working person, somebody that's really busy throughout the day, trading might not be for them. They might be more of a swing trader. Or for the person that does have time throughout the day, maybe they work for themselves, they own a business, they do other things that don't require them to be at a desk job throughout the day, right? Maybe trading would be better for them. So in this video, we're going to be talking about different aspects of trading and different aspects of investing and figuring out which one is better for you. So for those of you guys that are new to my channel, my name is Stas, and I make videos dealing with swing trading, day trading, long-term investing, and my personal philosophies and strategies when it comes down to investing and trading in the stock market. So for those of you guys that are interested in learning more about that, feel free to drop a like, leave a comment, and subscribe, and let's get started with the video. So when we're looking at trading in the stock market, this is more of a short-term activity, right? If you're looking to day trade, right, this means you're buying a stock and you're selling a stock in the same day. So you're going to actively be on the computer looking at trades, right? Looking at stocks, looking at trends, and this takes time, guys. People that work throughout the day, like I said, right, they don't have the time to sit at the computer for a couple hours a day looking at charts, trading in and out of the stocks, right? Trading in and out of the markets, right? So this may not be the best strategy for the working person. So there's day trading, that's an aspect of trading, right? And there's another aspect, which is what I personally do more of, and that's called swing trading. And you don't have to be as active in terms of looking at charts, doing technical analysis, and always looking at the stock market, right? And this is a way that working people, people that have desk jobs, people that can't be at their computers during the market open, right? During the market, the day, right? This is an opportunity for them to get into trades and hold them for a longer period of time, right? And we talked about day trading, that's buying and selling in the same day. But swing trading is buying one day, right? And you can hold the stock for a matter of a couple of days, for a matter of a couple of weeks, and maybe even months, right? And you guys have been watching my channel and you guys have been seeing how I've been doing this, right? I don't really day trade too often. Most of my trades are buying and holding for a couple of days up to a couple of weeks and maybe even a couple of months, right, with some of my longer term trades. So swing trading, guys, is definitely the way to go if you are not too active in terms of looking at the computer all day, right? Looking at the stock market, and this will definitely lead to your success if you put the work in, study charts, and enter at the right times, right? And when we're looking to do short-term swing trades or day trades, we're not really worried about the fundamentals of a company in most cases, right? We're mostly looking at the trend line of that particular stock, the pattern in which the stock is moving, right? And maybe sometimes short-term news, maybe sometimes earnings reports. These are ways that people trade in the stock market, right? We do our technical analysis. We make sure a stock is in an uptrending pattern. We're making sure that it's correcting itself, meaning that it's having healthy pullbacks and it's maintaining that uptrend pattern, or at least that's how I personally trade in, swing trade in the stock market. So there's many different ways you can do it, guys. You can play an earnings report. A perfect example of this, right, could be Tesla, right? This is an example of trading on short-term news. So we saw that Tesla, guys, they were under investigation, especially Elon Musk, before sending out a tweet a couple of weeks ago saying that he was going to take Tesla private. And from there, the stock shot up about 10-15%, all the way up to about $382. Then we saw the stock fall all the way down to about $262 as, you know, investigations started to occur and happen against Elon Musk, and the SEC was starting to sue him, file a lawsuit, right? This shot the stock down all the way to $262 because there were rumors surrounding Tesla and Elon Musk, like, is Tesla gonna fire Elon Musk? Is Elon Musk gonna step away from the company? And this scared a lot of people, causing a massive sell-off in the stock, and this was this past Friday, right? We saw the stock go from about $300 all the way down to $262. And this is the perfect example of short-term news fluctuating a stock, right, which would cause or could cause entry points for a potential trade if you do see value in a trade there, right? And now, lo and behold, what do we see? On Saturday, we saw news come out that Tesla will keep Elon Musk as CEO, but he's just stepping down from being the chairman of the company. And what happened, guys? The stock went from $262 all the way up to $310 last time I checked when I was downstairs on my computer. So that was a 17% move in just a matter of 2 trading days. So that's a perfect example of how short-term news and, you know, news surrounding a company could cause fluctuation in the price, which is great for traders. So now that we talked about trading, let's talk about investing. So when we're looking at investing in a company, investing in a stock for the long term, we're more interested in looking at the fundamentals of that company rather than what the stock's chart is looking like. So we're looking more at the numbers in terms of the financials. Is the company growing? We're looking at the balance sheet, and we're also looking at many other things, including, you know, how that company is ran, the direction of that company, and the outlook of that company for the next 5 to 10 years, as well as, you know, the industry that company is in, the sector that company is in. There's just so many different things surrounding what we look at in terms of investing in a stock, investing in a company over the next 5 to 10 to even 20 years. And just how there's different forms of trading, like swing trading and day trading, like we talked about, there are also different forms of investing. You can be a value investor, you can be a growth investor, looking at companies that have heavy growth aspects and prospects over the next 5, 10, 20 years. And you can be a dividend investor, which is a more conservative investor, investing in companies that have been here for a long time, like Coca-Cola, Johnson & Johnson, Pepsi, right? And these are dividend income producing investments, meaning that you buy a certain amount of shares, right? And however many shares you buy, this stock pays a dividend based on how many shares of that company that you own. So let's say you bought 20 shares of Pepsi stock, and Pepsi stock pays 3% in dividends per year, and let's say you're getting $5, let's say for example, of dividends per share of Pepsi that you own annually. That means you're getting about $100 per year in dividends, right, from Pepsi's stock, as well as however much that stock appreciates in value, or if it does depreciate in value, you're losing money that way. But pretty much, guys, you know, investing in the stock market is a more passive strategy. You don't have to be actively looking at stocks and stock market news on a day-to-day basis to be a successful long-term investor. Sure, you have to, you know, keep an eye on your portfolio and make some readjustments here and there, but that can be more on a monthly basis. Maybe every 2 months, maybe every earnings report, you check out your stocks, you check out your portfolio, see how it's performing, and adjust on that basis, right? But for the most part, guys, it's more passive if you're in it for the long run. And of course, you're going to be funneling money into your portfolio and buying shares of the companies here and there, but it's just not as active as trading is, where you have to be, you know, in front of your computer on a day-to-day basis when you're swing trading and day trading, just paying attention to the technicals, to the charts, to the short-term news, to the short-term earnings reports that do fluctuate stocks in the short term. And I would definitely say that investing is probably the better strategy for the average Joe out there that's just looking to save up some money, throw it into a portfolio, and then just pick some stocks that way. Because let's say you're an average Joe, you're working your job, you don't have much time to get in front of your computer and do all the stuff that traders do. It's more practical that you're going to be just buying stocks every couple of months and just continuously adding money to your portfolio that way. So pretty much that's it for today's video, guys. If you enjoyed it, feel free to drop a like, leave a comment, and subscribe, and let me know what you are. Are you an investor? Are you a trader? Or are you doing both of these things like me personally, guys? I'm personally a trader, swing trader, some day trading here and there, and I do have a long-term investment portfolio. So let me know what you guys think. I'll catch you in the next video. Peace.